Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Wednesday, June 9th, 2010. This morning we're talking about ban the shorts. Now, both France and Germany have called on the Eurozone to ban short selling on certain stocks and government bonds with the intention of curbing speculation in the market. Now, there's been a problem here with what we call naked short selling, in that there's a lot of speculation that goes on with these CDS contracts, things like that. These aren't regulated, and that's sort of what was the problem when we had our banking crisis here in the U.S. However, there's oftentimes unintended consequences of taking this kind of action, and this eventually could end up hurting the Eurozone in their ability to raise much-needed capital. So we're going to have to see, what happens with this. But this is a united front now between France and Germany. Germany has started to do this before, but now they're calling on the rest of the EU to do it as well. So we'll have to see what happens. But this could affect euro-related currency pairs if all of a sudden, their markets come to a halt. So we'll have to see, how that works out. But just remember that, the euro will still move, and most likely it's going to be to the downside. The trend is still lower, and we still have this great risk of sovereign defaults occurring around the different nations of the eurozone. So that's what we're seeing today. The euro's a little bit higher, just breaking through the 120 level here. Looks like we've got a little doji here hanging outside of Bollinger Band, but I'm not ready to call this a reversal yet. Looks like we have some resistance up here around 122. We also got ECB President Trichet. He helped push the euro higher with some comments talking about the stability of the eurozone and how they all have to kind of work together, blah blah blah. Anyway, this kind of ties into what I was saying yesterday about this being the week for a lot of economic cheerleading. And in addition to what we got out of the Eurozone, we're going to get Bernanke's comments today on the Fed Beige Book report, and I expect him to echo his comments that he had the other night, which were intended to send the markets higher. Don't expect any change to language about raising rates, and in fact, I'm willing to bet that at this point, we're not going to see a rate hike here in the U.S. For the rest of the year. Okay, some other news going on is that let's take a look at New Zealand. We don't pay a ton of attention to the Kiwi, but nevertheless we should. They've got their rate policy meeting coming out tonight, and it looks like they found a little bit of support here on the daily chart around, 65, almost 66. However, I'm looking at stochastics here, which look like they're going lower. I could see a potential push up higher here to around the 20-day moving average, maybe at 68, going into this expected meeting. Now, right now, the market's priced in roughly a 75% chance that they're going to hike rates here. But I think I'm in the 25% camp that says they're not going to do it. There's a lot of problems going on with the Kiwi economy. They're a much smaller economy, but they sort of ride the coattails of Australia. So I feel like they've, they're both, rewarded and punished for what goes on with Australia. Now, there's, of course, a lot of news out there that potentially there's going to be a Chinese slowdown, which could potentially hurt them, as well as these problems in the Eurozone. So I don't feel like in New Zealand they're that, ready to make this happen. I don't think inflation has, reared its ugly head to the point where they may need to do this. So I'm going to guess it's not going to happen. They may do it just to inspire confidence, but my general feeling is that it won't happen. So keep an eye on the 66 level here. That's going to be important for the Kiwi. Now, the pound has bounced back a little bit here. It's gotten back over 145 after 4 days of losses. It looks like the market is kind of putting its faith here in this David Cameron, new British PM, and that he's going to be able to help rein in the fiscal problems in Great Britain. And that appears to be confidence occurring more so than what we're seeing in the Eurozone. All right, lastly, we talked about the dollar. Let's talk about the yen real quick. The yen's lower here on general risk-taking that we're seeing in the market. We've got the risk appetite. Aussie's higher despite having, let's take a quick look at the Aussie first. Aussie's higher despite having lower consumer confidence for 3 months in a row. Okay, and then back to dollar yen here. Okay, you can see we're just sitting above the 20-day, and right now risk-taking is occurring, so we're selling yen. Now Japan's going to report their GDP figures tonight or tomorrow, depending upon how you look at it, which is expected to show moderate growth but steady growth. All right. In addition, the new finance minister, the guy's name is Noda, he said he would like to see price gains above 1%, but he stopped short of making that an official inflation target. All right. Now deflation has been a problem in Japan for some time, and they're hoping to combat that through coordinated policy between the government and the Bank of Japan. So, as I talked about yesterday, this is a cheerleading week for the various markets. Not a ton of hard data. I myself, I prefer to see the hard data, and I prefer to make my own decisions. But you have to pay attention to what these guys are saying because they can move the markets, and at the end of the day, the market's always right. So you can participate even if you think the fundamentals don't line up, and that's okay. I mean, if the market's going up and everyone's buying, you know what? You can buy it too, but you want to pay attention to the technicals and kind of watch the technical analysis going on, because basically what happens is that the market's going to decide what these comments mean, and then as a result you need to react to what the market does, not to what these guys are saying. So if you do decide you're going to jump in on some of these moves, if they occur, be ready to exit quickly if there's a change in sentiment, because as we like to say, the market's always right. So if you don't have a good grasp of the technicals, come check out our currency trading courses. We'll give you a primer on that, and we'll get you set up so that you know what you're looking at when you look at these charts. So that's what we got for today. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.